So without any further ado, I would like to hand over to Andy Shields, who can share his slides as well now, and then he can take over and explain us a bit about the used car market evolution in 2020. Andy, is this working?
Super. Yeah, thank you very much indeed. I'm sharing my screen, so hopefully you can put that up live at the moment. Is that?
Yeah, if you do it in the,
that's fine.
That's good. Mode.
There we go. Excellent. Can you see my presentation, Johan?
I can, yes, perfectly now. Good,
perfect.
Thanks.
Excellent. Firstly, thank you very much, Johan, for the introduction. Yeah, as you discussed, the aim of my presentation is to give a run through of the European used car market today, and given the year that we've just been through, probably just reflect a little bit on that. The aim is just really to lead to the basis of then opening the conversation in terms of the learned experts following me to discuss where you see the market trajectory. Just to introduce myself, my name is Andy Shields. I'm the Global Business Unit Director of Indicator. Indicator is part of the Autoroller Group, one of the key sponsors of the event, and we're a global leader in online remarketing and automotive IT solutions. As an organization, we are divided into 3 global business units. Our solutions division looks at developing customized IT solutions for fleet owners. Our marketplace solution looks at a wide range of online auctions for European and global vehicle vendors. And I'm lucky enough to be able to head up the Indicator division, which is the next generation of used car business intelligence and market insight tools. Let me just give you an overview of how we collect our data together before I share the insights with you. So as an organization, what we do is we extract every single day information on 9 million vehicle adverts from a range of OEM websites, classified websites, franchise dealer websites, and we bring that into our database, and then we let our AI and data analytics loose on it. And what that does is make sure that we firstly identify the vehicles correctly, so our AI vehicle recognition can look at a photograph of a vehicle and even spot the model year by the positioning of the fog lights on that vehicle. But we also do a large amount of data analytics to understand the dynamics of the market and the pricing of the market and the attractiveness of vehicles overall. That we then play back to our customers using a wide range of very different pricing and market analysis tools. And what I'm going to take you through today is data from our Market Watch analysis tool, which allows people to give an insight in the dynamics of the marketplace. So let's start with looking at the European used car market in terms of sales. So what I'm tracking here is the change year on year of sales across the European marketplace. And you can see that the market started quite well. January, February, January was 12% up, actually February was about 15% up. But as we went into COVID land, and that saw a drastic drop down in the total European market, 50 to 53% drop in the market in the month of April. For the recovery, and it was a V-shaped recovery. It was very quick, it was very rapid, and it brought us actually back to round about the same level as we entered into COVID land. And that has actually trended all the way along. So it's interesting to note that whilst people call it pent-up demand, we'd actually just call it demand. It's just actually running at the same growth rate as it was running before we went into all the problems of lockdowns. If we just look at different marketplaces as we go through the COVID experience, we can see that different marketplaces reacted in different ways, both in the depth of the pain that they felt, but also the speed of recovery. So if we take the top line there in the dark green, Netherlands, very light series of lockdown requirements, and as a result, the market stayed relatively strong and stable. At the other end of the spectrum, you can see the UK, which went into a very deep period on the basis that all dealers were completely shut, not even service areas open in a large number of them, and took a period of time to recover. Poland, equally almost as deep, but a very quick recovery as the government there released the lockdown requirements sooner than other marketplaces did. But even if we look just at the October data, we see is still a massive variance by country overall. It ranges from Portugal, which has been a really successful market post-lockdown, which is running 31% above, Turkey 24% above, actually slightly weaker than the sort of 50% above that it's had just recently. And at the other end of the spectrum, we see marketplaces like Austria, Poland, Netherlands that are actually now slightly back compared to where they were. But from our perspective, we look at this as it's not just a demand related factor. We actually start looking in more detail with our market watch analysis in terms of the supply side equation. And that's something that we want to share with you now. So let's start by using the example of the Polish market, currently down 3.8%. But if we look at the price trends within Poland, since the release of lockdown, we've seen price growing. Now that's interesting. Why would price grow if there is a lack of demand in the marketplace going backwards? Normally that you find that in a downward market in terms of volume, you also see price pressure bringing price down. So why has price grown despite the volumes being down? Well, once we start looking at European dealer stocks, then we start seeing a really interesting trend. The market is very short of stock, and I think as remarketeers, we fully understand that. And if we take the case of Poland, it's actually one of the tightest marketplaces that's there. And the stock since the middle of June, sorry, the start of June to October has dropped by 25%. And that means that supply has actually been the key driver in that market. With stock down 25%, what we've seen is the stock turn, the rate at which the dealers have to turn their stock over, has gone up by 30%. And they're at the breaking point overall. They just cannot bring enough cars in to be able to keep the sales rate going. And that's why you see the marketplace is actually down. Now, the volumes, therefore, are constrained by stock, not by the demand side. Now, what's interesting is across the whole of Europe, this actually also applies not just to countries, but to different ages, different segments, and different fuel types as well. So what we've seen is the fact that the stock constraints have kept prices relatively firm all the way through the year. This is looking at prices across all fuel types for a range of markets, starting index of February being 100. Now, this is a fixed basket of vehicles. So what we would normally expect to see in terms of the trend here is as the life cycle of that fixed basket of vehicles extends, then you'd see a gradual decay in the pricing of that. And as we all know, there's also some elements of calendarization towards the back end of the year. So virtually all markets are running up compared to where we would normally expect those marketplaces to be. Now, I'm going to drill in a bit on battery electric vehicles and hybrid sales because they're showing incredibly strong positions. Electric vehicles are currently running 116% up year on year, and hybrid vehicles are running 107% up year on year. And so it's very easy to say, well, this is just a function of everybody becoming far more environmental, and the fact that diesel and petrol are so far behind is a big swap, is a big move from environmental cars to environmental cars away from diesel and petrol vehicles. But we look at it from a different perspective. Is it demand or is it supply driven? Now here, what we're looking at is the stock turn. As I said, the stock turn is the rate at which dealers turn their vehicles around. So if you've got a dealer that has got, let's say, 100 vehicles in stock, and they sell 1,000 cars in a year, at the end of the day, that's a dealer who's got a stock turn of 10. It's a very high stock turn. Here, what we see is the diesel and petrol stock turns are actually quite high. Across Europe, 7.4 and 6.7 for petrol. Now, normally we'd expect them to be much lower than that. So we'd expect them to be around about 5.5, 6. So what we're seeing is a great increase in the year-on-year stock turn rates, which illustrates the level of short supply that is in the marketplace at the moment. In fact, diesel cars are the most popular cars. They're the cars that are selling the fastest in the market as we stand, which is interesting for something that's not meant to be environmental or in vogue. Once we start looking at electric vehicles and hybrid vehicles, we see that the stock turn of these cars is actually very low. It's below the norms that you'd expect for the whole of the European market, particularly on electric vehicles. And the other thing that you see is the fact that electric vehicle stock turns, despite the very high sales that have happened, remain very much in free supply. And therefore, it is a case of the free supply that is one of the drivers behind the electric vehicles being as strong as they are in terms of the volumes that they have. And it is the shortness of supply of diesels that is holding back the market overall currently. Now, if we then compare prices between traditional powertrains and battery electric vehicles, on the left-hand side, you've got the petrol pricing position, which overall has remained relatively constant across the whole of Europe. But if we look at battery electric vehicles, you see that not only is there a decay, but in many cases, that level of price decay on battery electric vehicles is way in excess of the sort of natural decay that we would see, as I described before, as a result of life cycle and normal trends. So battery electric vehicles are currently having not such a great time in terms of their pricing position. So what are the challenges then moving forward? Well, the key challenges are the fact that now this whole shortage of stock that I described is now beginning to change. And this is the month of October, and it's continued into the month of November. But we can see the great levels of stock increases that are happening within dealers across Europe. The other thing that we're beginning to see is how the new country lockdowns are impacting demand. So here you can see how France, as a result of a range of the lockdowns that are out there, the demand is cutting back. You can see that also in the UK. And as at yesterday, we've also seen Austria now going into a full lockdown. So we've got this combined situation of stock levels increasing and demand beginning to be held back in a number of countries where lockdowns are starting off. What we also then see is as supply begins to increase, we see this risk in terms of pricing. And those of you who are used to the UK market are fully aware that this has been one of the leading markets in terms of price increases. But since August, UK dealer stocks have increased by 29%. And as you see, as we move into November, there is a very fast and very quick drop down in dealer pricing as dealers react to this situation. It's fair to note that over the previous lockdowns for the February, March, April, May position, dealers held their pricing relatively constant. Yet now they're taking action to bring themselves back in terms of their price position. So what does the future bring? Well, outside of new lockdowns, there is still demand. I don't want to be doom merchant. There is still demand, and that is still showing in the month of November. But the key thing to remember is that stock is becoming far more available in the marketplace, and it's the ratio of supply and demand that drives price in our market. Prices are firm on traditional powertrains, but battery electric vehicle prices are less stable despite the massive volume growth. And with battery electric vehicles, they remain in very free supply as car manufacturers keep pushing these vehicles onto the marketplace as a result of the CAFE regulations, etc. We're beginning to see some pricing weakening in some markets. And now we're really thinking as supply catches up demand, how much prices move forward and how much will they fall back? And our particular concern area, and this is the debate that the colleagues following me can have, we see that free supply on battery electric vehicles is going to be one of the key challenges within the market. Thank you very much for listening to my presentation. Johan, can I hand back to you?
Thanks very much, Andy. Just a question that came from Ed. Does the decline, because you've seen the decline, is it a bit seasonal, or is it really just because of closure of our countries and lockdown, basically?
Are you talking the decline in the UK, or are we talking just the battery electric vehicle decline?
No, decline in UK.
In terms of the decline in the UK, both from a volume-wise and from a price-wise position, the price position there is the 3-year market, and that is in excess of what we would normally expect. We wouldn't expect as much in terms of price decline, and definitely we wouldn't, because dealers are all locked down. There is a much stronger decline in terms of volume because you just can't buy a vehicle at the moment.
Yeah. Okay.
So it is in both cases, and in the French market as well, which is the other one exhibiting this trend. It is above the natural positions that we'd expect at this time of year.
Okay. Well, Andy, thanks very much, and a great insight in what happens today.
You're welcome.